What will you listen for from Christine Lagarde after she's decided there's no recession ahead?
Well, I will listen, of course, to three things. First of all, what does she say about the future path of interest rates? Does she go beyond this meeting by meeting approach? Any hint whether the next move could be 50, 25, or another big 75? Again, that's the one key thing. Second, I'd love an explanation why they don't yet see a recession. We expect a significant recession in coming months. And third, any comments on the future of their asset purchase programs? More precisely, any comments on could there be some quantitative tightening, some roll-off of expiring bonds from the ECB's balance sheet in the future? Or what do they think, and what do they think about current yield levels? Are they anywhere close to needing this TPI new intervention program in favor of Italy? Probably they are not, but any comment on that would, of course, be most interesting.
Holger Schmeiding, what is the power of Ottmar Issing, of Axel Weber, of a Bundesbank culture back to World War II, certainly back to the Reformation of Europe coming out of World War II? What is the Germanic power at the ECB this morning?
Well, say the hawkish viewpoint on rates did prevail. I wouldn't quite call it Germanic power. It is just that we've seen such a surge in inflation that the European Central Bank, like the US Fed, has decided it needs to be seen as fighting inflation. And we'll hear whether this was a consensus. I suppose this was a near unanimous consensus that the ECB at the Council needs to do something significant. And the quid pro quo may have been that the ECB does not, judging by the statement, edge closer towards quantitative tightening. So that's something which the doves may have gotten out of it. But we'll hear at the press conference any comments about that.
Holger, would you call this front-loading or just incredibly delayed?
Well, this is front-loading relative to ECB standards. They haven't done 75 basis points before. That is quite a bit, especially in a situation where many indicators suggest that the economy is heading not just for stagnation, but probably for worse, a recession, which over time will, of course, on its own dampen inflationary pressures.
A lot of journalists listening to your response, Holger, and trying to work out the appropriate question to ask the president in this news conference. Just why isn't she forecasting a recession? Why is the staff of the ECB not forecasting one?
That's a good question. I'd love to listen to the answer, and I will try. And I'm sure one of your colleagues will pose that question at the news conference. My impression is that, the ECB is typically a bit slow in revising these forecasts. They have now meeting after forecast round after forecast round been forced to make significant changes. And secondly, they may be a bit under the impression of the very good data for the second quarter, above trend growth in the Eurozone, and what was in Southern Europe probably a very good tourist season over the summer. But if we still hang in Q3, despite all the bad news about energy, that actually means that the risk that Q4, from a good, still decent Q3, that Q4 could be deeply negative, that risk is actually rising rather than falling. And I'd love to hear the ECB explain why that should not just be, why that should be stagnation rather than actual recession.
That's the benefit of the doubt version of things. Then you've got the Vasilios Giannakis take on it, which made him somewhat bearish on the euro, all things being equal, saying it highlights how this is an ECB that still is prioritizing growth in tandem with just fighting inflation, which makes him somewhat concerned. Do you get the same message from the fact that they did not forecast recession, that they're still forecasting growth despite very much higher rates and despite some of the incredible economic pain facing the region?
Well, I don't quite get that impression. I would focus more on it's been 75 basis points. It's been 50 basis points in the meeting before, more than the ECB had indicated beforehand, especially a few months ago. And the ECB has vowed to raise rates further. So I don't think that this decision today exhibits any sort of hesitancy on doing what it takes to tackle inflation. The real question over here is whether anything the ECB can do really will have a significant impact on inflation, as the European inflation, a bit unlike the US inflation, the European inflation is largely a matter, well, of Putin's war against Ukraine, of the sky-high wholesale prices for gas, for electricity, and not the result of any excess consumer demand over here, or not yet at least the result of any excess wage pressures.
Is there a pivot point threshold that you're looking for? In other words, is there a point of pain in the economy that might be big enough for the ECB to reverse course?
Well, the ECB probably won't reverse course, but I think that come the beginning of next year, with probably the fourth quarter having been significantly negative, and the outlook likely to be that in the first quarter of next year, the recession will remain pretty deep, that then the ECB will likely go on hold. So the ECB may now raise rates, the main refi rate, to say 2% by December, with a chance it could be a bit above that. But next year, with the economy in a probably quite significant recession early next year and late this year already, next year I think the ECB will then stay on hold and let the recession and the base effects of inflation do the job of bringing annual inflation down again quite a lot over the course of next year, from probably early spring onwards.
Holger, Christine Lagarde will parse today the difference between Brent crude and natural gas. What is Berenberg's research here on the separation of a much better statistic for a barrel of Brent crude versus the agony of what we see in natural gas right now?
Well, over here, these various sources of energy are very disconnected, in the sense that Brent crude is, of course, one major element of a largely global market for crude oil. And in the global market, we've seen a bit of, price easing for oil in response to, recession, or at least recession fears. Whereas gas prices, extremely volatile, are up to the calculus, can Europe make it through the winter or not? We are currently modestly optimistic that Europe can make it through the winter without having to ration gas to industry. But the price for that is, we in Europe are filling up our storage facilities quite nicely, but we are paying through the nose for it. So natural gas and to some extent electricity reflect the European drive to basically prepare for the winter at almost any cost, whereas oil is a global price, more or less.